give you the markets update now. Local trade will be hoping to recover from last week's sessions, those losses. The JSE tracking weaker global markets on Thursday as fears in the banking sector were reignited. Investors also digesting another interest rate hike by the Federal Reserve in the United States. Also commentary after the announcement. Let's talk now to Matete Thulare. He's head of foreign exchange execution at Rand Merchant Bank, joining us for a quick update on how the JSE is performing in early trade. Mr. Thulare, good morning to you. Let's begin with the Rand trading throughout the week. What's your assessment in how it has performed, but also important, the decision by the European Central Bank to increase rates? Has that impacted trade at all?
Good morning, buddy. Look, I mean, the Rand remains in ranges at this point in time. This is despite the huge amount of noise that is in the system. One last major risk and hurdle to get through this afternoon is the U.S. jobs numbers at 2:30. But this does not likely seem to generate any sort of volatility. I mean, we have started the morning at 18.27 against the dollar. There's a moderate, downward bias against the Rand. There is a huge amount going on in global markets at this point in time. Like you rightfully alluded to, the bank stress is intense. The regional bank share prices are under huge pressure. The Rand at this point in time has delivered a negative return of around 6.85% on a year-to-date basis. There is a lot of key event risk and uncertainty for the global market. I mean, if you think about the geopolitical tension that's going on in Eastern Europe, that is still continuing. You are still seeing the US-China trade wars and the tension there. There's still volatility in the commodity space. And also, you rightfully say, the central bank decisions are also ongoing. We saw the Fed on Wednesday evening. We saw the ECB yesterday afternoon. And then we also know that we're also having our own central bank meeting at the end of this month. And it looks like, obviously, with all the inflation data and all the expectations and how all the central bank governors are talking about, all the data being what is going to be critical, the headlines, all how things are unfolding in terms of their decision making. It looks like at this point in time, we might price in ourselves for another 25 basis point hike locally. But do remember that on the 24th of May, we also have the local inflation data. That's also going to be quite critical before Lesitsha Kganyego and team make their announcement on the 25th of May.
25 basis points, my goodness. All right. Let's talk about electricity generation now, decreasing by 5.6% year on year in March 2023. Seasonally adjusted electricity generation increasing by 4% in March of 2023 if compared to February of 2023. What does all of this mean? But I suppose the important question around it is the impact of all of it.
Rightfully so, Claudia. I mean, if you think about it, electricity generation obviously has decreased about 10% year on year in February. That's mainly due to one attributable factor of the high levels of load shedding. Now, Eskom still needs to announce their winter plan, but it is expected that they are going to allocate a portion of their budget to diesel, which is obviously going to keep the lights on. But National Treasury, remember, in February has refused to further fund Eskom with any additional expenses, having those have to come from Eskom's budget. Now, the other important element with regards to all of this is the fact that investors are now looking at South Africa with low confidence, especially in the government's efforts to try and deal with load shedding. I mean, already last year we had more than 200 days worth of load shedding, and almost every day so far in 2023. So obviously Eskom's plan going into winter and over the next 6 months, starting this month, includes them ramping up the use of emergency diesel power generators and also improving the performance of some of the worst performing power stations. Now, they have alluded to the fact that they're also planning to exempt some places such as hospitals and schools from load shedding. But I think at this point in time, it's a wait and see game as to how the next 6 months unfold. And this is why you're seeing the electricity generation numbers looking so dire.
Let's conclude with the company news. Implats set to hold about 45.2% of Royal Bafokeng Platinum after further purchases. Talk us through those developments. What does this all mean?
Yeah, look, it's an ongoing saga. I mean, Impala, obviously yesterday coming out to say that they've signed a deal to purchase another, further 0.12%, shares in Royal Bafokeng. I mean, this is now increasing their shareholding, to about 45.2%. Now, Impala has wanted to acquire, fully RB Plats for some years now. But as the deal appeared imminent late last year, we remember Northern coming in and acquiring about 32% from RB Platinum. And obviously at this point in time now, Impala has said that the agreement are part of its ongoing offer to buy out Royal Bafokeng. Already another company update from Impala on Tuesday showed that there was a 10% decline in their third quarter production numbers, obviously on the back of the reduced smelter availability and also the intensifying power cuts that have hit production. Impala, I mean, if you think about it, they also have operations in Canada and Zimbabwe, but also on the back of this in Zimbabwe, they also have electricity supply issues. So I think for them, it's more about diversification and obviously expanding their footprint. And this is why they're still wanting to buy out further shares in Royal Bafokeng Holdings.
Matete Thulare, let me thank you very much for that market update ahead of foreign exchange execution at Rand Merchant Bank.